What's up, everybody? Dave Bartosiak here, and I have another chart of the day. And today we're talking about Mr. Softy. That's right, Microsoft. Now, why are we talking Microsoft? Well, they have earnings coming up tomorrow. So I wanted to see what the stock looks like heading into that earnings report. Now, I switched up my style a little bit here. The only moving average that I have plotted is the 200-day. Most significant of all of the moving averages. But I also have the relative strength index, 14-period relative strength index here. And we'll explain a little bit about that. So RSI is what they call a overbought or oversold indicator, family of indicators. So the TLDR on this is that when this RSI gets above this line here, it is thought to be overbought. When it gets below this line down here, it's thought to be oversold. The middle is neutral, and it starts to get a little less neutral as it goes away from the middle. Okay, I know that is a gross oversimplification, but you all know I respond to the KISS message. Keep it simple. So that's where we're at with that. Now, 200-day, obviously very significant for a stock like Microsoft, and you'll note how that 200-day provided resistance before things shifted and got bullish, very bullish, in fact, for Microsoft in January 2023. Sort of bottomed out there, and, well, at one time more than doubled. Stock has since retreated. So what's happened recently? Because this is all that matters. What have you done for me lately? So after nearly getting up to 470, you have a retrace to the 200-day and below, which was ultimately bought. This day pops up so often. That's that August 5th. You guys remember? If not, quick reminder, that was the day that yen carry trade blew up over the weekend, and we were all freaking out. Turns out that was a great day to buy. Also happened to be a day that came under previous support. Buyers were there. Right near that same level is where they came in again. So as the stock has just ventured just below its 200-day, it's been a pretty decent spot to buy. Here we are just above it. So we really haven't moved off of it much, right? We're in a pretty tight range. Other thing you'll notice, there's a low, there's a higher low, there's a higher low. Yeah, there's a high, there's a lower high. And here we are. So the range is contracting heading into earnings. And you get that a lot, right? As essentially what happens, you'll see that, and typically you'll see volumes drop down too. And that's people just sort of taking a back seat, taking a wait and see approach because they want to see what happens on earnings. So ahead of that, what do we have? We got the stock right about 430, okay, 429 and change. The RSI is basically neutral. It's a little starting to push closer to that overbought territory, but this is neutral. Okay. It's in this neutral range in the middle. We don't have to worry so much about it. So what can we glean from this thing? Well, what we can glean is that all-time highs up at 470 are likely to provide some sort of resistance if the stock's going to go nuts, right? Now, back in the day, I used to be able to say things like, oh, there's no way this gigantic company is going to shoot up, $40, right? But we've seen some crazy things. Just look at the move that happened to Tesla, right? But I just want to give you some levels here. This swing low, that August day, these are probably your, much less likely to occur events, but still levels that you should have on your radar, right? The more likely level, I believe, is this sort of 450 and 400. So this is kind of the area I'm expecting this stock to bounce around in. And remember, also heading into this report, what do we have? We have obviously a ton of other earnings reports coming in, but we've got an election right around the corner. So it's going to be hard for people to come in and deploy enough capital to really get this thing skyrocketing. On the flip side, I don't believe that they're going to come in and totally dump it ahead of the election, right? There's just, I think that in terms of volume, this is going to be one of the lower volume events. And in terms of the move, it's going to be a little bit less. So I'm not expecting a huge move here for Microsoft. Those are some of your parameters. And remember, this 200-day has provided support for this stock for a long time. And even when it hasn't provided support, like back in 2022, when you got these moves against it or away from that 200-day, eventually it finds its way back, right? So it always sort of seesaws and teeters its way back. So I feel like if stock really comes under pressure, you can scoop it in as it gets a few bucks away from that 200-day. But I don't think that's going to end up happening. I think we get a little bit of a nothing burger. Again, I want to zoom out again here so you can see, periods of time where Microsoft really spent a lot of time below its 200-day moving average are pretty rare, right? Even in, 2016 time, there's some 2015, it goes underneath, but it doesn't stay there forever, right? There are times when the market's under pressure, the stock's under pressure, but eventually it catches a bid, right? So picking up Microsoft underneath the 200-day moving average, typically good over the long run, especially if it does get oversold. So here's a period where we have that RSI that got oversold. And sure, if you're buying it, at 25, it's kind of funny when you think of it. This is $430 stock. We're talking about buying at 25, 2010. But that's just the nature of the beast, right? That's the reality. If you wait for an oversold RSI and you buy beneath the 200-day moving average, you're probably going to do pretty good historically, especially if you're just kind of holding your nose and continuing to buy, right? Even during some really nasty historical downturns where you have, 2008, right? Stock under pressure, oversold. If you went ahead and bought some, at least you got to retrace the 200-day. It fails again. RSI starts to get oversold again. You can peck at it again. Every time it gets oversold, peck at it some more, right? This is why it's important to have dry powder and to keep investing in the market. Eventually, the rubber meets the road, and then you see how things have taken off. On the flip side of that, when you do see the RSI gets overbought, which we've had happen recently, it doesn't mean that the run is over for good. It just means it's stalling out a little bit. So this is kind of one of the most extreme examples where RSI tops out stock at 350 and then it fails at the 200-day and it comes under pressure. You don't feel like too much of a champ when you're buying at 350 and the stock comes all the way down to 210. But if you're holding your nose and you're buying those dips as that RSI gets oversold, eventually over time, things are going to be just fine. So too often we are looking for this magic bullet that's going to be right 100% of the time. And oh, this did this. So this went up and it happens 99% of the time. Forget about that. When you get an oversold RSI on a stock like Microsoft that is dips down underneath the 200-day, probably a good time historically to go ahead and peck on it a little bit. So you'll see if Microsoft does come under pressure and the RSI comes down, that's going to create a buying opportunity. But like I said before, I'm betting that doesn't happen here as it's kind of a wait and see. There you have it for my chart of the day. Be sure to follow the author here if you're checking us out on Zacks.com so you can catch all of my chart of the day videos. Subscribe to the YouTube channel and come back next week. No, wait, tomorrow. That's right. Come back tomorrow for my next chart of the day, which I'm sure is going to be a good one as I'm going to dig for something very relevant that's going to happen later this week. So if you have suggestions, let me know in the comments below, and we'll try to get that done. So for everybody here at Zacks, I want to say thank you, and we'll see you all tomorrow.